In this video, I'm going to tell you why the market's probably going to go a lot lower. And you know what? That might piss you off. And you just might disagree. But I tell you what, if you watch this video, you're going to understand. And by the time it's done, you'll learn to embrace this moment. All right, let me say hello and welcome everyone. Doug here with thelincolnlist.com. Today I want to welcome you to this video where I'm going to talk to you about why this market's probably going to go a lot lower. And I know you hate to hear that, especially the Kool-Aid drinking bulls, right? Who are used to this linear market going up and just melting every day. This is going to hurt your feelings, but you're going to be better for it. You're going to make more money for it. And I promise if you watch this thing, you're going to learn how great these moments are in the grand scheme of things. Because if you guys go back to the video I did in 2018 where I was talking about that correction, how that was going to just make us a lot of money, and it did. And how the coronavirus correction was going to help create opportunities, and it did. I mean, look at the rally after that. So these corrections, first of all, for you guys that are new to trading, these are healthy. It's a sign of a healthy market, and the market's always going to go through these periods. So what I want to do is explain to you why I think we're not done yet for the selling, where I see this market turning around, and we're going to take a look at that from a technical standpoint first. Then I'm going to talk a little bit more about seasonal. You know, how does the market traditionally trade around an election? And as you know, in the States, we've got a very important election coming up here. We've got a divided country, right? We've got a lot of heat coming in here. So I want to talk about how that may impact our trading and how we're going to make money and how we can position ourselves the best here going through from now until the end of the year. So we'll start out here with the SPY and just get a snapshot of the market. Now, first of all, I'm not going to sugarcoat this shit at all. I'm going to tell you guys right now, a lot of these stocks were overbought as hell, especially tech. I mean, you go back, just pull up a chart. Some of this stuff is just ignorant moving from 40, 50 bucks a share to 300 to 400. Hell, some of them are still running. To sit there and try to make a case that that's not overbought is just dumb. Now, just because it's overbought doesn't mean it can't get more overbought. That's another dumb analogy, but not being cautious about some of these things or not being aware of where you are in a market cycle and how things are operating is also very ignorant. But now if we take a look at it where we sit right now today as I'm doing this, we're roughly close to 10%. Just here yesterday, we clipped about a 10% correction right here where I'm at 322.87 roughly is a 10% correction. Now, a lot of people say 10% correction territory is normal, and that is, but just because we're at 10% doesn't mean that that's going to be the bottom. There's no standard in market tradings of what happened in the past. If it bounced at 10% doesn't mean it's going to bounce this time at 10%. If it goes to 20, it's supposed to bounce. No, it's not. Every correction is unique in its nature, and this one is no different. Now, we do have some levels of support here that brought us back to the later part of July. So seeing a bounce here, a short-term bounce, is not out of the question, because you're naturally going to have the theory in the minds of, hey, it's 10%, market should bounce. Hey, we're at support, should bounce. And I think we do. And also I want you guys to understand as well, just because I think the market may go lower, doesn't mean you're not going to have periods of 2 to 3 or maybe even 4-day rallies. But I think what we have seen in the past, this correction followed by an immediate snapback to all-time highs, I don't think you're going to see that here, at least in the near future for the next couple of months. So this is where we sit here. Now, I would expect in the short term that we do see some sort of a bounce, but I don't expect that we're going to go back up to the highs, at least not until after the election, which we'll talk about here in just a second. 20% here on a correction would be roughly 290s. I don't see that. I think overall the worst case scenario that we might get is 300. Now, yes, why technically do you feel you're going to go lower? Well, there's some emotion that's baked into this chart as well. Number one, we had one of the most epic rallies, coming out of coronavirus of any rally, and everything needs to be corrected. And I think you had some FOMO, you had some money being injected into the economy there, and you had some new traders coming in and all this stuff, and it made this perfect storm for this thing just to continue to rally, especially tech, especially coronavirus type stocks. And it's not uncommon to see these things get corrected. However, what we've seen is the recent attempts around the 5%, 6% mark. We talked about how the emotional trading session of 9/11 is normally a bullish session, was a gap up and fade. And one of the things that you have to understand is the tempo in which the market operates. Normally, in a bull market, when you get a pullback, it's immediately consumed and the market, gets its buyers and starts to work its way back up, oftentimes taking out the highs. Remember, the guys come to the checkmark webinar, goes down and then it comes back up. You've seen that around the 5-6% level here, but you never had any interest in buying. Every rally that we have had pretty much over the last couple of weeks, since this started, every single rally that we have had has been sold, and sold quickly. And if you look here closer at the chart, you expand it a little bit, you're not finding more right now. Since this whole correction started, we haven't had 2 back-to-back green days. So think about that. You go from a market that's going up every day to not being able to get 2 back-to-back green days. You're going around where breakout trades are working, to where nobody's interested in breakouts. You're going to where dip buying is working, nobody's interested in dip buying. So there's just a lack of interest. And what I'm saying is the herd, the funds, the institutions, the big houses, they're afraid to put money to work. They're not interested here. Now, one of the things I've always said as well is the market will drive prices up as high as it needs to make it unattractive. And then they'll all of a sudden drive them as low to make them attractive again. So what has happened here is that simple supply and demand, that the market has rallied so much it became unattractive. It's not worth putting new money to work. It's not worth taking risks at that level. Now you're selling off, and where we're selling off, based on the climate that we're in, you're just not at that spot right now where you've attracted new, fresh buyers at this place. Now, the next thing I want to do here is talk about this from a seasonal standpoint of how does this market react normally, or what have we experienced historically during elections. Now, again, that doesn't mean this is how this one is going to work, but I think in this case and what we're experiencing right now, we're going to see something very similar. So I'm going to post this chart up here real quick that I have here on the screen that shows normally going into an election year, right before the September, the October prior to an election, is normally bearish. There's some selling, and that's understandable. You can have an administration change, you definitely have a political change, a Fed change, and all of that stuff. So there's some pre-election jitters no matter what state of the world or the state of the country is. That's something to be expected. Now, one thing I hate talking about is politics, but sometimes you have to put politics inside of the market because it's sensitive to that. It's sensitive to world events. It's sensitive to political events. These things that impact the country, the people, impacts the economy and causes people to get nervous. And I think we're at this period of time where there's a complete division, and that's another topic altogether, but let's just face facts. There's a division in our country. There's a lot of things socially happening in our country, and I think this is going to add to those jitters. Understandably so. Now, will we get through this as a country? Will we come through the coronavirus? Will we come through our problems? Of course we will. And like I said at the beginning, the long-term projections never change. The market will be bullish more than it is bearish. This is just a blimp on the radar. But for you short-term traders out there, we're looking to do the best we can with what's in front of us. And we have to take all of these things. It's not, and what I want you to understand as well, don't beef on me. This ain't about politics and what side of the fence you're on. It's about understanding how you're going to make some money, because at the end of the day, we got to take responsibility for ourselves, and we got to make the money with the best. We can't control any of this. So I can't control if everybody's going to flip out and start selling stocks. I have to be able to react to that and understand it. So that's number one. Seasonally, you have that. And of course, the market coming off of all-time highs, especially how bullish it was, is also another indication. Now, another thing I'm going to show you here on this screen as well is that during the month of August, we had a record outflow coming from funds and executives selling stock in the billions. It's like $6.77 billion, the largest that we have seen since 2015. So you can combine this, you can start to read what is actually happening here in real time, and that is the market is at all-time highs. You're entering an election year, which is normally, I'm not going to say the election year is bearish. I'm saying the months prior to the election is bearish. You have record outflows and selling coming in at all-time highs, showing that investors and traders are nervous going into this election. And what this equates to is the Fed itself has lost its short-term power. So when Powell's coming out making these speeches about not raising interest rates and doing all of these things for the economy, well, that's Powell. He may not be there in the next year or so. Nobody knows that. So what I'm telling you here, guys, if we look at the market technically, it's telling us, number one, these rallies are being sold off, and we can't do any back-to-back. There's no real money being put to work here at these levels. And normally what that means is when you're looking at a stock and it does that, you're looking at a market when it does that, it's got to find a lower price. It'll find a lower price where people will step in. Now, is this going to be a crash? No, but I'm thinking somewhere around 15% or a little bit lower towards the 300s on the SPY is probably going to be enough. I will say that we're probably going to experience more choppy, sloppy, inconsistent action from now up until mid-October, maybe entering November. It's hard to tell how that's going to play itself out. You combine that with the seasonality of the stocks normally being somewhat bearish those 2 months prior to election, a Fed that's losing its power, at least for the short term, because they may not be there in the future. There's always that chance. And you have this record outflow and selling here. It's to be expected. Now, what will eventually happen is this cycle will work like every other cycle. We'll find a bottom. Buyers will step in. They'll put money to work. They'll be willing to take a risk. But, you also have something else I've failed to mention up to this point, is the recycling of maybe another global shutdown from coronavirus. So perhaps when that first coronavirus correction started, people thought, okay, it's not going to be as bad. We're not going to lose as many jobs. But now if you go through a second wave of a shutdown, that's adding a little bit of jitters to it. So when you combine all these things, it's not uncommon to see that. Now, one last thing I want to say here prior to me just moving off of this is, if you're going to be a trader and make this a career, you got to embrace corrections, because actually corrections is what makes you rich. It does. Because if you get the 20-30% corrections, you're not overpaying. And I also did this in video one time, especially to young people out there. If the economy always grows and the market always goes up, and real estate, inflation, everything always goes up, you're overpaying for everything. You're overpaying right from the start. I mean, who wants to invest in Apple at all-time highs after it's up 60-70% for the year? Wouldn't you want a correction so you can get a better price to enter that thing for the long term? Why do you want to uppay it? Why do you want to buy the market at all-time highs? Most people don't. You want to get value. And that's always crazy because people never do that anywhere. You don't go to a grocery store and start saying, I want to overpay for everything you have, twice as much as what you're offering here on the tag. That's just dumb. But anyway, one thing you can't do here, guys, you can't just drink the Kool-Aid. Market's going to correct. It'll find its way. It's all going to be good in the long run. But if you're looking to put some money to work, just be patient here. You're going to have to understand what you're in for, what we're all in for. It's going to be choppy. It's going to be inconsistent. Yes, there's going to be rallies, and people are going to suck into those rallies thinking, okay, that's the bottom. Maybe it is. I don't know. But probably not. You're going to need to work this out. It takes a little bit of time. So anyway, guys, I hope this helped you out. As always, if you need some help with your trading, make sure you visit the linkenlist.com. Join us in the live trade room. Join us for the investment newsletter, which is up 45-50% this year. Even in this mess right here, it's still performing well. So make sure you check that out. As always, take care, trade well. Talk to you soon.